Hi, Malcolm here, and this is the Energy Action Market Wrap for Friday the 23rd of August, where we're going to look back on what's been happening in the electricity market over the last 7 days. Demand hasn't been out of the ordinary, although it has been a little bit lower in New South Wales. Daily average spot prices have eased over the last 2 weeks and are now pretty close to the lowest level that we've seen since the beginning of the calendar year. In South Australia, negative individual half-hourly prices are having an increasing effect on the daily average. In August, in South Australia, over 9% of the individual half hours have been either negatively priced or priced at zero, and those negative prices have knocked over $15 per megawatt hour off the average daily price over the month. The occurrence of negative prices in other states is much lower, and their impact on average price is much smaller, although that could change as more renewables come online. We haven't seen any unusually high priced periods. Water levels at Snowy are unchanged on the week and are higher than they were last year, which is good news for the summer, but they are still quite low in historical terms. The softer spot prices that we've seen aren't having any impact on futures prices or on retail prices to commercial and industrial customers in the eastern states, although prices in Western Australia have eased a little bit over the last 2 months. The uptick that we saw in large-scale certificate prices last week has been sustained, and prices for February 2020 delivery are up about $2 a certificate, but for the following 2 years are unchanged. It's been a big week in the news. AEMO has published its annual Statement of Opportunities, where it looks forward over a 10-year period to forecast the adequacy of generation and transmission in the national market. It sees conditions in Victoria for next summer as being particularly challenging and identifies the current outages at Loy Yang and Mortlake power stations as posing a significant risk of blackout should these extend into next year, something it sees as being likely. While supply conditions are better in other states, they have deteriorated over the last year. AEMO believes that the standard that it's required to use in assessing system reliability doesn't properly reflect the risks associated with the changing conditions in the electricity market, and it believes that if the standard was updated, the picture would be worse than the one currently painted by its report, and that itself isn't rosy. AEMO also points out the increasing need for it to intervene in the market to ensure that sufficient generation is available, and points to the increasing costs of this to customers. You can access AEMO's press release and the Statement of Opportunities report at this address. Global oil and gas giant Shell has announced it's to acquire the Australian independent electricity retailer Power in a deal valuing the company at $620 million. Shell has been pursuing a lower carbon strategy for several years and has identified Australia as one of its target markets, with the acquisition of providing it with direct access to a substantial base of industrial and commercial customers. That's about it for me. If you want to subscribe and you're watching on YouTube, hit the red button, or if you're watching on Facebook or LinkedIn, hit the link provided. And as ever, have a good day.